All right, what not to do when going through the home loan application process, especially when you're in escrow. So, today we're going to talk about some major no nos that you should not do when you're applying for a mortgage. If you follow these steps, it's really not that bad. I can tell you right now, out of the thousands and thousands of loans that my team have done, I can always go back and look at the 5%, 10% that were more difficult than they should have been. And it came down to a few major things. So the reason I like to make these videos is hopefully you see this up front in advance, and it can help prepare you and make life easier for you. So everybody, welcome back. My name's Aaron DeHart. I have been a mortgage lender since 2003. So yeah, I am coming up on my 23rd year in this industry. So if you find these videos helpful, do us a favor, give us a like and a subscribe, and please feel free to share it of anybody else that you think might find these videos welcome. So let's get right into it, guys. I'm going to go over some of the top things today not to do that can not only make the loan process more difficult and more stressful for you, but could also prevent you from obtaining financing. So let's get right into it. Number one, I'm going to go with not being able to document large deposits in your bank account. When we're doing a home loan, we are required by federal law to get your last 2 months of bank statements for any of the accounts that are going to be used for either down payment or for your closing cost. If you have large deposits in there and we can't source them, we cannot use them. I'll give you a perfect example. So where I live at in Nevada, there's a lot of gambling here. And a lot of times people will, go and watch a football game at the local sports bar. They're playing some poker and they win $4,000. They win a $4,000 jackpot, something of that nature. And they go and they get a receipt for it. They show that they won that money, but instead of depositing the entire $4,000, they keep $500, whatever it is, and they deposit $3,500. That receipt does not match up. So we have to be able to track funds. Now, if you have been saving money or you're getting money and you are transferring it from one account to another, the best thing to do is to do that months before you even want to start the process. So that money is sitting there and it's what we call seasoned. Those funds are seasoned because we're going to look at your last 60 days of bank statements, your last 2 months. So it's super important. Any type of deposits or any transfers, if an underwriter sees that transfer, they're going to say, hey, where did this money come from? We then have to get that other account showing that the money was in there. The less paperwork, the less things to look at, the better. Now, obviously, if it's direct deposits from work, retirement income, pension income, disability from the VA, it's going to show that. So we can track that and source where it comes from. That's not a big deal. I'm talking about cash deposits or deposits that we can't verify, et cetera, et cetera. If you are getting Zells on a regular basis or something of that nature, if it's a large amount, a lot of times the underwriter might want to know where that is from. So that's something you need to be prepared for. Here is the number one way to get around this. What I always tell people is when you're starting your home buying journey, and again, you should be starting it several months in advance, open up a separate savings account and name it, whatever your last name is, home savings account. And you don't touch it, so all the money that's going in there for your down payment and or closing cost, whatever it is sitting in that account, and you have it seasoned and ready to go. So that's probably the number one thing that I think makes the process more difficult, is us not being able to track and source where certain monetary items are coming from. So super important. If we can't track it and back it up, we can't use it. I'll give you a perfect example right now. Doing a VA loan for a young man. He is an authorized user on a whole bunch of his parents' accounts. His parents say he makes the payments all the time. Not a problem. we needed to get 12 months worth of Zelle payments to be able to show that he made those payments. Well, he just lumped some stuff here, lumped some stuff there. There was no way for us to track it, so we couldn't use it. So we had to go to alternative methods. So I'm going to give that number one for things that make the loan process more difficult. So make sure you're able to track your funds, keep them organized, etc., etc. Number two, not having your income dialed in properly prior to underwriting. What I mean by that, if you're just a regular salaried employee, something of that nature, or you're paid hourly, 40 hours a week, it's really not that big of an issue. Where we see issues arise is when someone has a lot of overtime or they get shift differentials. I'll give you a perfect example. Nurses, police officers that we work with, a lot of times they'll get shift differentials and like 2 or 3 different overtimes that we've got to dissect. So every single loan requires what's called a written verification of employment, where we actually get your year-to-date income broken out for the last 2 years plus year-to-date. So if you have overtime or shift differentials or anything like that, we want to get that broken out up front. So for overtime, if you remember from any of my other videos, we need a 2-year history of receiving it in order to use it. Same thing with bonuses. If you have not been getting that overtime consistently for 2 years, we can't use it for qualified income. We get so many rescue loans that come across our plate on a monthly basis where literally stuff could have been solved in the first 48 to 72 hours. But the other lender didn't do their due diligence. They just assumed, oh, they've been getting overtime. And a lot of times it's a difference between that home loan getting approved and not getting approved. So something very important to think about with that. So make sure your income's dialed in at any time during the process. If you're hourly and working 40 hours a week, do not stop working any less hours. If all of a sudden you're like, oh, I'm going to start taking a few days off and whatever, and you're only working 30 hours a week, that can have an impact on your calculated income. We call that variable income. So number two, make sure your income's dialed in. If you have overtime or bonuses, things of that nature, have that conversation up front. It's very important. The lender should be asking, hey, how long have you been getting this? And we need to verify it, even though we have your W-2s, your tax returns, your most recent pay stubs. We need to be able to verify that with a third party, which is your HR department, with your employer. Number three, and I hate this one, it causes stress on everybody involved in the transaction, going dark and not communicating. I can't stand it. You're a grown adult buying a house. It's not our job to babysit you, and it's not our job to chase after you. No good lender is going to chase after you guys. So, like I always use the analogy, when you're borrowing hundreds of thousands of dollars, we're on trial. And it's mine and my team's job to build a case that we present to the judge, the underwriter. The underwriter is the person that's going to approve your loan, give it that stamp of approval, and everything looks good. It's very common that we have to go to underwriting twice, okay? We're going to go once for the initial underwrite, and the underwriter's going to say, okay, everything looks good. I need A, B, and C now. And sometimes it has nothing to do with you. And other times it's, hey, we need an updated pay stub, or we need a letter of explanation about this or about that. Those are total normal, totally customary, and it happens nearly on every single loan. So make sure you're organized and you have that information ready to go. Again, create a separate folder on your desktop whenever you get a new pay stub or a new bank statement. Put it in there so when it is being asked for, you get it over right away. I can't tell you how many times we have to sit there and try and chase down people. Again, you're grown adults. I can't come and stay the night with all my clients and make sure they're behaving and doing that. So that's number three, and that's a big one. Don't go dark on your lender. Make sure you are communicating. If you are having problems getting something, communicate that. Let everybody know. Hey guys, I'm not going to have this available for 4 days. Here's why. Fantastic. We can make a note of that in the file. we move along and take care of other stuff that we can do. Number 4, I can't stand this one, and I make videos about it all the time. Giving notice or quitting your job before we have your loan closed. So what happens is towards the end of your loan, we're going to get what's called a final loan approval or a clear to close. What that means is the underwriters reviewed all the conditions that have been asked, and they're like, everything looks good. Final stamp of approval, this loan is finalized and this loan is clear to close. Now, a lot of times people will get that news, oh, cool, I can go and quit my job or give notice. No, something big happens literally right before they push the button to send the wire to the title company or to the attorneys, depending on what state you're at, to close that loan. What they do is it's a separate department within the bank or the lender that we're not involved with, and it's set up that way by design. They will call your employer and do what's called a verbal verification of employment. If they found out you have given notice or quit your job, your loan could be dead. I'll give you a perfect example. We had a loan about 10 years ago, and the kid was actually at signing his closing docs, and they were going to fund the loan a couple hours later, and they went to do the verbal verification of employment, and his employer said, no, the guy told me to basically F off and take this job and shove it, and that was 10 days ago. At the signing table, he was bragging to everybody that he actually got a promotion. He did. He got a new job, but he didn't start it for another 2 weeks. So we had to scramble, have conversations with the sellers that were extremely upset, and they could have walked away. They had every right to, but luckily they didn't, and we were able to close the loan. We had to have the kid basically start his new job a week early, which he wasn't happy about, but it is what it is. So you can't quit your job or give notice. And finally, the final one that I'm going to go over today that's super important not to do during the home buying process: no major purchases. Okay, don't open up any new credit cards. Don't go buy a car, a boat, an airplane, whatever it is. No new furniture. All the time I have these conversations with our clients. Hey, Aaron, okay, we want to get new furniture. Awesome. You don't do anything until we tell you that it's okay. Just like the verbal verification of employment, right before they push the button to fund your loan, they're going to do one final credit check, and they're seeing if you've had any new inquiries or any open trade lines that have established. Now, we have had situations in the past that during escrow, people are like, Aaron, my car broke down. I need to get my kids to school. What do I do? We have that conversation. We get an idea of what type of car payment you can afford. Make sure it doesn't affect anything that's drastic in your overall underwriting approval, and we go from there. So again, do not make any new purchases. Don't open up any new credit cards, any new lines of credit, etc., etc. So guys, if you follow those 5 big things, I promise you it will make life a lot easier. It's the difference between you getting frustrated and trying to find stuff. Take the time, get organized, slow down. Slow is fast. And I promise you, if you take the time to gather all that information at once and not piecemeal it to your lender, causes a lot less confusion. It allows us to do our job better for you and move forward and have a successful closing on your new home for you. Now, this is for purchases. It's the exact same thing if you're doing a refinance. All the same loans apply. Guys, thanks for coming by. Thanks for watching. Again, if you haven't already, please give us a like and a subscribe so we can keep the almighty YouTube algorithm happy and keep this going for other people. Thanks again. We'll talk soon.